As of August 4, 2026, the U.S. equity market is currently closed, with Palantir Technologies, Inc. trading at a closing price of $125.65 per share, reflecting a modest intraday pullback of 0.83% on normal daily trading volume. While the broader financial headlines continue to frame Palantir as an artificial intelligence pure play, riding the tailwinds of enterprise software expansion, the underlying data reveals a much more nuanced reality. Most retail traders looking at their screens assume that Palantir's valuation is tied exclusively to software seats sold to commercial enterprises. The reality that institutional desk managers are actually tracking is far more intricate. Palantir has quietly transformed into an infrastructure utility for critical national systems and enterprise operations. The margin profile of their recent deployments suggests that the market is mispricing the duration and stickiness of their platform contracts. When you look across retail trading platforms, from investors making an online investment on the Robinhood app or using Robinhood stock trading, to those building long-term equity positions through Fidelity Wealth Management, the prevailing consensus assumes high customer acquisition costs will eventually weigh on bottom-line expansion. But the operational efficiency of their artificial intelligence platform bootcamps has fundamentally inverted that cost curve. If you speak to standard institutional analysts or review typical investment research on popular investing sites, the common consensus on Palantir is straightforward. The popular narrative suggests that Palantir is a high beta growth ticker that relies heavily on volatile defense budgets, making it too speculative for conservative self-investing or managed wealth strategies like Schwab Intelligent Portfolios. Investors often group it alongside high-flying tech names like Nvidia stock, Apple stock, or Tesla stock, expecting immediate revenue explosions every single quarter. However, taking a closer look at the cash flows and execution metrics paints a completely different picture. The expectation is that enterprise AI adoption is a quick plug-and-play process where clients quickly churn if immediate return on investment is not visible. The reality is that once Palantir embeds its ontology architecture into an organization, the operational integration creates structural switching costs that mirror legacy enterprise hardware rather than traditional application software. The market is pricing Palantir like a standard software provider, but its institutional integration profile functions much more like a permanent core utility. Examining recent stock movement over the past several trading sessions, Palantir has experienced tight consolidation around key technical support levels, accompanied by subtle shifts in institutional accumulation. Daily trading volume has shown notable spikes on down days, being aggressively absorbed by large block buyers, signaling strong underlying bid support. Options market activity across major platforms like the Interactive Brokers platform and Fidelity Trading platform shows an elevated call-to-put skew, reflecting institutional interest in hedging upside exposure rather than downside protection. Earnings reactions over recent quarters have demonstrated a recurring pattern where top-line acceleration meets expanded operating margins, driving sharp upward re-ratings before cooling into sideways consolidation. Macroeconomic pressures, including persistent interest rate expectations and broad tech sector reallocation, have certainly created short-term noise. Yet institutional order flow executed through Interactive Brokers trading and Fidelity ETFs suggests that institutional money views these pullbacks as accumulation opportunities rather than structural exits. From a sector momentum perspective, software platforms that directly integrate complex enterprise data are outperforming point solution software vendors. While many retail investors using SoFi Active Investing or checking SoFi stocks might focus purely on headlines regarding quarterly guidance, institutional money managers utilizing sophisticated tools on the Interactive Brokers platform evaluate structural net retention rates. Palantir's commercial customer count has accelerated significantly, driven by rapid onboarding cycles that convert initial trials into multi-year commercial commitments. This shift in institutional buying pattern highlights a growing divergence between short-term retail momentum trading on apps like the Robinhood app and long-term position building conducted by wealth managers executing trades through Fidelity Investments or managing long-term assets in Fidelity IRAs. To fully grasp why this market dynamic exists, it helps to understand what Palantir actually does at a fundamental level. Founded in 2003 by Peter Thiel, Alex Karp, and their co-founders, the company initially focused on specialized software platforms for the intelligence community and defense organizations. Its flagship platforms, including Gotham for defense operations and Foundry for commercial enterprise data integration, were designed to aggregate massive unstructured datasets from disparate operational silos into a unified real-time operating picture. Rather than replacing an organization's existing software stack, Palantir lays an analytical and structural foundation over existing IT architectures. Their deployment of the artificial intelligence platform, combined with military-grade platforms like Titan, has expanded their addressable market beyond traditional data analytics into real-time operational execution. Historically, the company faced criticism over its reliance on government contracts and heavy stock-based compensation. However, over the past few years, Palantir achieved sustained profitability, gained inclusion in key benchmark indexes like the S&P 500, and rapidly scaled its commercial division, demonstrating that its core operating model translates directly into high-margin corporate environments. Comment below how many shares of Palantir stock you currently hold in your portfolio and whether you are buying more on this current dip. Looking ahead toward the future outlook for Palantir, the interplay between investor expectations and operational reality will remain the central force driving share performance. The prevailing market expectation is that intense competition from hyperscalers and specialized AI startups will erode Palantir's pricing power and slow down client acquisition. The reality, however, hinges on the company's ability to maintain its technological lead through its proprietary data ontology framework and rapid bootcamp deployment model. Key catalysts over the coming quarters include the expansion of large-scale military modernization programs, broader enterprise adoption of autonomous software agents, and potential margin expansion as onboarding efficiency improves. Conversely, primary risks stem from potential defense budget delays, extended sales cycles during macroeconomic contractions, and valuation multiples that leave minimal room for operational missteps. Investors who manage their own portfolios, whether through an individual brokerage account, SoFi Investing, Robinhood Investments, or an intelligent portfolio setup, must continuously weigh these structural growth drivers against short-term market fluctuations. In summary, the key takeaway for investors is recognizing the distinct gap between consensus expectations and operational reality. While public narrative frequently treats Palantir as an unpredictable high-multiple growth stock subject to volatile sentiment shifts, the underlying metrics reveal a business cementing itself as essential operational infrastructure across both government and commercial sectors. The company's financial transition into sustained profitability and accelerating commercial revenue challenges the traditional skepticism that once limited its valuation. As institutional volume continues to absorb daily market volatility across major trading venues like Interactive Brokers Trading and Fidelity ETFs, understanding Palantir's structural position becomes essential for anyone seeking clear investment help or navigating online investing. By looking past superficial price swings and evaluating the true depth of its enterprise integration, investors can maintain a grounded, highly authoritative perspective on where Palantir stands today and where its trajectory leads tomorrow. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.